Hey guys, Akil Stokes here of Tier1Trading.com. Welcome back to a weekend trading edge video. If you guys watched last week's video and the video that I put out midweek, you know that we had a big week in the markets, and hopefully I can share some ideas with you today that will continue that hot streak. Now, last week we did something a little bit different. We took a look at one opportunity and went into a lot of detail about it. Today, we're going to take a look at multiple opportunities around the market and probably spend a little bit less time on each one. Also, going to give you another DKC update at the end of this video. We had an amazing week. The new strategy, DKC strategy, has been kind of in a drawdown since I started trading it live in April, right? Nothing better than kind of giving you something new and having it go right into the crapper, I guess you can say. But we had an amazing week that not only knocked out our entire drawdown from the last 2 months, but put us in the positive as well. And again, the cool thing about that is I get to share that journey with you. So for you guys that are new, you can see what the process of trading looks like, and you can see why bailing on something too early is a negative sign. So we're going to get started here on the pound dollar. We got a lot of movement in the market to end the week. It was a jobs week. In about 2 weeks, we have an interest rate decision coming out for the U.S. We're still kind of on the fence between the Fed pausing and the Fed kind of continuing with rates. So the market is still kind of trying to figure that out. What we're trying to figure out here is, from a technical perspective, what trading opportunities are on our radar to take advantage of after Friday's directional move. And you can see the pound dollar had a very bearish directional move Friday. And I'm not asking myself, how can I hop on and get the rest of it? Because that's going to be a kind of a late trader mindset. I'm asking myself, when is this potential move going to dry up, and where would be the next opportunity to get involved? And looking at how price action has formed, we're coming down to a level that interests me, right? You see this level right here, which is going to be our last pullback. Doesn't look like a pullback here on the 4 hour, but on a lower time frame, this will be a pullback. We also have this bearish rejection candle. So price action pushed to the downside and the bulls push it up, and you can see a big breakout on the next candle. This is going to be an area of interest. And of course, if we look left, structure leaves clues, you can see we have some pretty good reactions of that price level as well in the past. Lastly, if I want to bring on my volume indicator here, my volume profile, and take it from this last swing high to swing low, let's see if there's a volume spike in there. Look at that, a nice volume spike right in the middle of that zone, and it looks like a 50% retracement if I just eye it up. Let's see if I'm right. Come on, make me look good in front of my video, people. Boom, look at that, 50% retracement right at that level as well. So here on the pound dollar, if price action gets into this zone, we can minimize this zone even more right here, then what we're looking for is a short-term counter trend trade. And what's important to understand is that when I say short-term counter trend trade, I'm not looking for price action to come to this level, shoot all the way up and make new extensions. I'm just looking for a short period of relief so that we can make some profit on the upside, then get out before the danger starts, and of course reevaluate for the next trading opportunity. So nice counter trend structure trade here on the pound dollar 4 hour chart. Next, we're going to head over to the dollar yen. We're going to go down to the hourly chart. I got a question under last week's video. Hey, Akil, do you still trade pattern formations, Fibonacci-based patterns, harmonic-based patterns? I didn't see them in the last few of your videos, and the answer is yes, I do. We actually had a very good pattern week the last 2 weeks. I had a disappointing one this past week as I missed one trade due to my own personal error, so slap on the wrist, poo-poo for me. I also missed two other pattern trades on the pound dollar that just missed the completion point by a few pips. So those I could do nothing about. That's just the market saying, ha, gotcha, it sucks. The last one during the week on the euro dollar, that was my fault. I just didn't see it. I have my Fibonacci's drawn in wrong. One of my live room members brought it up to me. It was too late, and it went on to win in front of my face, laughing at me all the way down, as everyone else made money but me. But that is, unfortunately, I didn't get a chance to take advantage of it, but that is one of the luxuries of being in a live room with like-minded traders. I do make mistakes. I am human just like you guys. I don't make as much, but when I do, at least I have traders that I trust that can catch them for me, and they aren't afraid about kind of setting me straight. So here on the dollar yen, we have an advanced pattern formation forming. We have a cipher pattern here, right? We have something that's going to look like this: X to A to B, B to C, and a C D completion. I got to go ahead and draw my Fibonacci retracement in from my X leg all the way to my A leg to make sure I have this correct. A CD completion that is right here at market, or I guess price is a little bit under market. You can see we're right at the 140 even handle. Psychological number alert, right? I should get a little song and noise that plays for that. So we're a little bit under it. We're about 9 pips under it. We're trading, or we closed currently the week at 139.91. The psychological number, the completion point for the pattern was at 139.99. So again, this is one of those opportunities. If the market does, maybe push up a little bit to begin the week, this is still an opportunity to jump in a bearish trade here on the dollar yen with this bearish cipher formation. Dollar Canada is the next pair we're going to go to here. You can see dollar Canada has come down to a previous level of structure support. Look left, structure leave clues, not only right here, but looking left in the past as well. The top of this kind of reversal formation here. And what we're doing is here, we're putting in a little bit of a consolidation. And what it's going to look like when we go down to the lower time frame is it's going to look like a sloppy head and shoulders pattern. And the head and shoulders pattern is a classic reversal pattern in the market. And I know we spoke about this in a few podcast episodes ago, but if you are new to technical analysis, understand that how you read things in books and how you see things in these kind of tutorial videos on YouTube isn't necessarily the same as how you're going to see them in real life. I understand the purposes of making them look good in videos. You have to teach them some way, right? Really hard to teach a sloppy pattern, but just understand that when you get into the real markets, sometimes it's going to look a little bit different. So our head and shoulders is going to look like this right now, our potential head and shoulders, I have to say. We have our left shoulder right here. This is our dive down. We had a brief retracement and then a continuation down, so an extension down to our previous level of structure, down to the 134 even handle number. Doo-doo! Psychological number alert, right? Oh, that was worse than the first time. I apologize. But then we have a retracement back, a deeper retracement back, which is a sign of a weakening trend. And what we're looking for here is a failed extension. Now, with this second retracement here, this forms what's called the neckline of a head and shoulders pattern. There's a few ways to do it. One way would be a horizontal line. That's how I personally prefer it. Another one would be more like a trend line where you're connecting the highs of this and you're putting in a slanted line like that. Whichever is your personal preference, what you're looking for is you're looking for price to make a move back up, violate one of these levels, and then if we violate those levels, that is validation of the head and shoulders bottom, and we should expect a period of relief back up. Now, the question is, where are we going to come back up to? We have some structure in here. We've got some structure a little bit higher up here as well. We'll revisit this during the week and touch on that once we see if this thing actually violates first. But keep an eye on dollar Canada here, 1 hour chart, for another potential bullish structure-based trade, this time using a classic reversal pattern called the head and shoulders. Next up, moving over to the pound Canada. This is going to be a decision point trade, right? And what we classify as decision points over at Tier 1 Trading are levels in the market where price action is going to take us one way or the other. So think about it like, those old school choose your own adventure books where you get to a certain point in the book and it says, do this, go to page 84, or do that and go to page 113, and you have to make a decision. Well, in trading, it's the same way. We need to make a decision on whether we want to be or have a bearish bias or a bullish bias. The difference is we don't just randomly choose what's on our mind or in our opinions. We choose based off what the chart is showing us. And what we're doing here is we're coming to a previous level of structure support. If price action proves to hold this level, so it doesn't break through, then we're going to have that bullish bias and look for another counter trend buying opportunity. However, if price action violates this level, means breaks and closes below, then we're going to look for a continuation trade to the downside. So currently price is trading right at this level. Right now, we have no idea what to do because we're trading right at it, but this is one that we want to keep our eye on because the market is going to give us a signal one way or the other, and it should give us that signal pretty early on in the week. Now it's up to us to decide, hey, if this happened, then how do I handle the situation? Or if that happens, how do I handle that situation? So keep an eye on pound Canada for our chart decision point. Could be a buying opportunity, could be a selling opportunity. We'll know when the week opens. Next up is the pound Swiss. I'm down on the hourly chart. This is going to be another pattern formation. This was the pair that I did a video midweek for you guys looking for the breakout. We came right to where we expected it to, right underneath that 140 even handled number. It's going to be that 139 even handled number. And now we started to retrace a little bit here, and we're putting in a potential deep Gartley pattern. So once again, I'm going to draw this in pretty quickly so that I can save time for you guys. I know you guys don't like watching long videos, but we're looking at something that looks like this. Initial starting point is going to be our X to A, that impulse leg to the upside. Our retracement down here is going to be our A to B. This second retracement is going to be our B to C, and if price action comes down to 113.01s, another even handle number, right? Theme of the day. I didn't do this on purpose. This is my first time looking at all these charts, so I had no idea that these are there. But a nice potential bullish Gartley pattern right at an even handled number as well. So a pretty decent opportunity there for you looking to buy. Just to enter another opportunity as well. This is going to be another decision point, another key level of structure. So if price action can violate these lows, right, then we can look for a push to the downside, excuse me. Now, this is an area where you have to do both. We can easily do both, right? Or this is an area where you have to do one or the other. We can easily do both. So price could push down here. The Gartley targets are probably going to be target 1, I would guess about right here, target 2 up there. If I just kind of eyeball it, let me just see how good I am. Yep, target 1 about right here, target 2 about right there. You can see I spent far too much time using Fibonacci's, but we can easily do that and then come back down and violate it, and this bearish opportunity is still going to exist. So if you're a pattern trader, eyes on this, probably entries already on the table to get involved in this aggressively. Very nice risk reward. Why? Because it's a deep Gartley right near the bottom. So we know that just kind of measuring this out without actually measuring it out. Oops, wrong way. We're going to be looking at a risk reward that looks something like this, I would guess, somewhere down there. And then at least target 1's up here, right? Again, that's not going to be perfectly on. I don't feel like doing the math for you right now. But regardless, you can see a pretty decent risk reward at hand because it's a deep Gartley. So 2 opportunities here on pound Swiss. Potential bullish Gartley almost at market. And then if we violate this level, there's also a potential move to the downside. Now, before we get into the DKC update, I want to take a quick look at Bitcoin. This was a special request from a buddy of mine on TradingView. I haven't really been interested in crypto for, well, really forever. I don't have too much interest at all in crypto. But from the chart perspective, a technical perspective, Bitcoin really hasn't done much for a while. But this trader was someone who was with us from way back in the Trade Empowered days and still supports everything I do. So you know what? You want to request it, we're going to take a look at it. I don't mind at all. So not a lot here, bigger picture Bitcoin. You can see really sloppy and choppy consolidation. And in my opinion, this is the new normal for crypto, right? I believe that markets go through kind of these, just like people, we go through these growth areas where we're young, we're immature, we're wild, and we're crazy, and everyone's rushing towards it because it's the new shiny thing. And then eventually our motor kind of slows down, right? When you get older, for example, I used to go out to the bar, I used to go out to the club and party all night, then drive 2 hours home and still have energy. And now it's like, I don't really feel like going out. I kind of want to be in the house and be in the bed by 8 and watch whatever's new on Netflix. Watching Fubar, by the way, Arnold Schwarzenegger, the chopper, get to the chopper, right? But Bitcoin's the same thing, right? It's going through this emotional phase here of crazy, massive gold rush type of directional movement. And now we've kind of slowed down. Speaking of this, I have a podcast coming out. Maybe I'll schedule it for this week, but it's talking about AI investments and kind of how the new gold rush for as far as like investment interest are AI related stocks, and we talk a little bit about when is the best time to look to purchase those. So keep an eye out for that. I'll try to make sure to put out this week on the Trading Coach podcast. Brand new episodes every Monday, Wednesday, and Friday, available on your favorite podcasting app if you don't listen already. But going down to the hourly on Bitcoin, the one thing that I found here is maybe like it's a sloppy head and shoulders. We talked about how these things aren't pretty in real life. Kids came home, so if you hear any screaming in the background, that's it. But you can see the consolidation that is formed here. We put in a left shoulder here. We kind of came down and put in like a double head, and a double head is something that's allowable in the market. And then we put in a right shoulder here. Now, regardless of whether you want to classify this as a head and shoulders or not, and this is stuff we talk about in the Foundation 2 course. So if you guys are part of the Tier 1 trading platform, you'll hear about this in a little bit, or when you get to that part of the course. What matters is we want to find the points that matter the most, whether we classify it as this, classify it as that, classify it as pretty, classify it as ugly. What is the decision point? What is the point that is going to make the pattern valid or cause us to make a decision about the market? And it would be this line right here. So if price can violate this level, then we're likely to go up. Now, where to? There's not a lot of space here. This would be the next level of structure. If we want to kind of pinpoint another opportunity, I would say this zone right here would be the furthest I'd be comfortable shooting for. I'm not sure if we can put any volume here on Bitcoin. Let's see if anything else stands out. Again, look at that. So, we joke around all the time on the platform. We talk about using this volume profile tool as a compliment confirmation. But I always tell people, if you get really, really good at evaluating structure and identifying key levels of structure, you'll be able to guess which levels have the highest spike, and boom, another example right there. So that could be the best point that I think Bitcoin can go if we break out. Let me just bring one more thing in. Should I go for it? Should I say 618 retracement? I was already right twice today. I don't want to be wrong and look like a loser. I'll be right again. Look at that. 618 retracement right on that level. I promise I'm not this cocky. It's a fun game I like doing. But yeah, that's a good target point. So the opportunity I see on Bitcoin here is if we can break that level to the upside, this head and shoulders or just level of previous structure resistance, then I think we can push up here. All right, that's it for the week as far as analysis goes. If you guys want to stay tuned and stay updated on the DKC, I'll give you a little bit of an update on that. If not, make sure you subscribe before you head out. A lot of you guys watch this video, but you're not actually subscribed to the channel. So do me a favor, subscribe. You can mute that notification bell if you're worried about getting like pinged and dinged. But I've been doing this live, or not live video, but I've been doing this weekend video for a very long time now. I do that out of the goodness of my heart because I like helping newer traders out there. This was something that helped me when I was a newer trader. So as a return, because I don't really ask for much, just hit that subscribe button, hit that like button, and support what I'm doing here. That way I'm motivated to keep doing it each and every week for the foreseeable future. All right, let's hop into some DKC stats. So if you've been in the loop here on YouTube or on the Tier 1 trading platform, you know that the DKC got off to a rough start. I think last week we were down about 8 or 9% year to date. You also know, right, when we did the review of the strategy, it's a very streaky strategy, right? It has a very low win percentage. We're looking at like 35% around that rate, and it goes on these massive losing streaks. And stuff like that is important to remember because I just started trading this live in April, which was about, 2 months ago. And what we see a lot with traders is that they ditch their strategy too early, meaning if something doesn't work the way they want it to work right away, they give up on it, forget all the stuff they did to develop it and test it and whatnot, and they go to something else. And typically that something else eventually has the same results. So one of the reasons I wanted to keep you guys updated on a weekly basis, or best that I could, I know I've forgotten over the last few weeks to do so, is because I want you to see the journey of what real trading looks like. And I did something very similar years ago where I took like a 17% drawdown in my personal trading to start the year and told you guys, hey, we'll dig out of it, we'll dig out of it, and we'll dig out of it. And lo and behold, we did. And it brought a lot of traders a lot of confidence. So this was the first mega week that we had on the strategy. And I told you it's a very streaky strategy. So it goes through these periods of time where it kind of does nothing or it loses. And every once in a while, boom, there's these big pops. And that's what we need to take advantage of it. And this week we did. 9 trades, which has been the average. You'll see that in a little bit on the next slide where we take a look at the year-to-date totals. 77% win percentage this week and about a 13% return, right? I had to check those numbers a few times and make sure nothing was messed up. About a 13% return, which was fantastic. Now, year to date, where that puts us at is it puts us back up to about 35% with our win rates, like 34.6, but I rounded up, which is, again, that's the range that I would, it's still a little bit of an uncomfortable range for me personally, right? 40 is kind of my my floor, but knowing this strategy, 35 is what I would expect. And a year-to-date total of about 4.31%. And again, year-to-date is going from first week of April 3rd or something like that. So really good confidence builder to have that massive week to get back on track. It's always tough. This is the first time I've started trading it, so you don't know if the backtesting results are going to be similar to the live results, and stuff like this throughout weeks, months, years, and in my case, decades now. It just brings confidence, and it will allow me to withstand or get through the next drawdown a little bit more comfortably next time. So yeah, good stuff. Hope we have another great week next week. And I'll see you guys next week with another episode of the Weekend Trading Review. Weekend Trading Edge. Sorry, I'm all over the place. Sorry, I'm thinking about trade plan reviews that we're doing in Monday's Q&A. Anyway, enjoy your weekend. Until next time, plan your trade your plan. Take care.